So look, when it comes to deciding where to park your money, you have two main options: credit unions or banks. Both offer similar services like checking accounts, savings accounts, credit cards, and loans, but just because they have similar services doesn't mean they're created equally. We start to see the differences when we look at things such as interest rates, product offerings, and convenience. In this video, I'm gonna break down the differences between credit unions and banks, and I'm gonna tell you guys why I prefer one over the other. So let's start with the biggest difference: ownership. Traditional banks are owned by investors, so their main objective is to generate big profits for their shareholders. Similar to credit unions, the operations are overseen by a board of directors. However, with a bank, the board of directors' main objective, again, is to generate those profits for their shareholders. Credit unions, on the other hand, are not-for-profit cooperatives. They are owned by the members that use them, and they typically work in your best interest. That's why you'll find lower fees, sometimes no fees at all, better rates on savings accounts, and a more personalized experience. It may be a time where you accidentally overdraft your account, and a credit union, more times than not, they won't charge you that overdraft fee that a large bank may charge you. Unlike banks, credit unions don't have customers, they have members. And these members are shareholders that even have a vote on who sits on the board of directors. Because credit unions are not for profit, whenever profits do come in, they end up benefiting the members of the credit union in the form of lower fees, better interest rates, and sometimes you may even get those profits returned to your bank account. When deciding whether you want to go with a credit union or bank, it's important to consider these factors. Is your money safe? Do you need access to cash nationally and internationally? Are you looking for a specific product or service? Both the banks and the credit unions insure your deposits up to $250,000. The banks are insured by the Federal Deposit Insurance Corporation, better known as the FDIC, while the credit unions are insured by the Credit Union Administration, also known as the NCUA. And because they're for profit, most banks are actually considered small businesses. And as of this year, there are a little over 4,700 banks insured by the FDIC that control a little over $23 trillion in assets. Banks come in all shapes and sizes. They can be as small as one branch or as big as many branches, such as the big banks like the Chases, Wells Fargos, and the Bank of Americas of the world that we know today. Now, don't sleep on credit unions. They get busy too. There are about 137 million members at credit unions across the country. As of 2023, the NCUA insures a little over 4,600 credit unions, which control about $2 trillion in assets. Now, while this isn't as large as the $23 trillion that banks control, $2 trillion ain't nothing to play with. If you have ever looked into joining a credit union, you've probably noticed there are certain membership requirements, such as who's your employer, where you live, what schools reside in your area. A lot of credit unions also require you to open up a savings account and deposit $5 into it. These requirements are regulated by the NCUA, who approves what's called the field of memberships for the credit unions. So when it comes to whether I prefer credit unions over banks, here's why I prefer credit unions. For one, you typically get lower interest rates on your loans and your credit cards. You're able to get higher yields on your certificate of deposits and your money market accounts. And you're typically able to get your first high limit credit card, typically ranging between $10,000 and $30,000, which could help you in terms of business funding in the future. You also have a say in what happens by being able to vote on policies and decisions. So even though I prefer credit unions, there are reasons why I still use banks. Most credit unions can't offer what the big banks provide due to a lack of resources and size. Case in point, most big banks offer introductory 0% interest on a credit card when you first get approved, and a lot of credit unions typically don't offer this. However, they still tend to offer lower interest rates than a big bank will on their credit cards. And if you're one of those tech savvy people who like having access to your money 24/7 via mobile apps, banks are gonna be your best bet because credit unions don't have access to the capital and resources as the banks do, so they're not able to provide you with mobile apps. And if you do have a credit union that provides you with a mobile app, more times than not, it's not gonna be as user-friendly as some of the bigger banks like Chase and Wells Fargo. The banks offer a wider range of products and services due to the ability to reinvest their profits into their offers. But at the end of the day, it all boils down to what you prefer. I personally use both credit unions and banks depending on the situation. For example, when it comes to my clients and they're looking to get their first high limit personal credit card, we always go with credit unions in their area or nationally recognized credit unions to get them that first $10,000, $20,000, $30,000 credit card. This helps them to get business funding in the future because they're able to piggyback off of the large personal credit card limits to get large business credit card limits. I recommend checking out ibanknet.com to search for credit unions and banks in your area. When you get there, you're able to click on the bank map, select your state, and you'll see a list of banks and credit unions based on their asset sizes. These institutions will be listed by asset size. I recommend going with the top 10 because they'll typically have more money to lend out to you. Check out the video to my left where I break down the best beginner credit cards. Appreciate you guys for tapping in. Make sure you hit that subscribe button. And as always, have a play for your money, family. Let's get it.